When you think about property settlement, I bet you're mostly thinking about just one thing. What percentage am I going to get? But it's so important for you to know that two people with the same income can both walk away with 50-50 and end up in completely different financial positions, because the percentage is just that. It's a percentage. But what it actually looks like and how it will work in your life moving forwards is what actually matters. So if you've been asking yourself questions like, do I take the house, the super, the shares, the business? How do I make sure what I walk away with actually sets me and the kids up for our future? Then this episode is for you. If you've got complex financial systems, trusts, companies, self-managed super funds, multiple properties, and you're freaking out, or you just want to make sure that you don't make a mistake that's going to cost you years down the track, this is a really important episode for you. Today, we're joined by financial planner Pedro Marin, and we're breaking down the 4 key steps a financial planner might take when helping someone through a property settlement and divorce, so that you can make sure you don't miss these steps and you can consider them yourself. We needed to do this episode as a reminder for our listeners, because when your property settlement is the one thing you desperately want and are completely focused on, you sometimes can be blind to also making sure your settlement is actually what you need and making it work for you in your new life.
Hello, I'm Laura, a divorced mother of 3, and I'm here with my mother, Lynette Galvin, with 35 years experience in family law. You're listening to the Divorce Course podcast. Through our candid discussions, we hope to help you through your divorce or de facto separation. We will be answering the most commonly asked questions and covering the stages and steps that you will face on your way to freedom.
Welcome, Pedro.
Hi, everyone. Thank you, Laura. Fan numero uno.
Thank you so much for coming along again. Just a reminder so everyone knows who you are, so they're not, listening to someone who's just a rando on the internet. Pedro is a financial planner, certified, and he's also the managing director of Marin Wealth. He's got over 13 years experience. And if you listen to this podcast for a while, you know he's not new to the podcast. He's actually been with us since nearly the very beginning, when Mum and I used to record on our coffee table. So you might recognize some of his episodes, and if you haven't, go listen to them. Weapons of Tax Destruction, which is a really good one. Living Arrangements, Should You Keep or Sell the House, and Red Flags in Financial Abuse are some of his really popular ones. Pedro is originally from Venezuela. He's now based in Brisbane. He has a really clear and empowering approach towards financial situations. He explains it in normal people speak, which is what we love doing on the Divorce Course podcast. And the other thing that Mum and I absolutely adore about Pedro is he was in the Dancing with the CEOs for Women's Legal Services, supporting women experiencing domestic violence. He raised over $42,000. And I think that says a lot about the kind of person he is, as is the kind of person he is, giving us his time today to walk through us such important decision-making time. So, but before we start, just a reminder, Pedro's not your financial planner. He is not a lawyer. I am neither of those things. So this is not legal or financial advice. We are talking about the 4 steps financial planners may take when helping someone through divorce, so you can think about it and talk to your lawyer about it or your financial planner to get that help. Wow. Welcome, Pedro.
I'm glad to be here again.
So if anyone hasn't checked out the Dancing with the CEOs videos, I bet you they're on the internet somewhere. So go and see Pedro do his little groove.
No.
Yes.
No, I've erased them all from, well, they are. There's some on YouTube. Oh, it's going to follow me forever. But I'm happy. I was glad. It was a great experience. It was truly what they said. As soon as it's done, you said, I want to do it again, even though it was terrifying.
Yes. And $42,000 for Women's Legal Services, just amazing. So we're so appreciative for everything that you do for anyone going through this stuff. And Pedro, let's just start with the question I want to ask, and what people would be thinking is, why should someone going through property settlement and divorce talk to a financial planner at all?
Yeah, look, there's several aspects that are very important. The first one is when you, most likely, it depends on how that property was purchased, but most properties are purchased by a joint income source. So now you're looking at, well, one source is gone, and can you maintain that? Is it in your best interest? What's the structure around it? So there's quite a whole array of questions we asked ourselves as professionals before we say to someone, this is for you. Go ahead and basically put it in your world. Tax-wise, is there any benefit? Is there any issues? Is there actually, it's the tax? Because imagine and again, this is pretty general, but most of the times if you hold, for example, an investment property and it's negatively geared, it works for someone that has a high marginal tax rate. But if the person who's receiving it, it's not earning too much, then that negative gearing means nothing. Or it's actually sucking cash out of your world. But I think discussing these questions with a professional brings a lot of education to an informed decision-making process. So that's why if you ever think of, separating and there's property and there's any structure involved, discuss it with a professional, because we'll ask questions that you may never thought of.
So you might think, oh, this looks like a great deal, but then you get the deal, you sign off all it all, and then you realize, oh, this is bitten me in the butt. So it is good and important to talk to your accountant or financial planner. What are people getting wrong when they only rely on a lawyer? And I'm not dissing on lawyers. And look, and some people's financial situations are quite simple. But, what kind of things are going awry? Because I know you've been involved in some divorce property settlements, helping out the lawyers. What areas are the lawyers kind of lacking in? Do you know?
I'll quote Lynn on this one. Lawyers are not numbers people. They're not. The numbers are for us. So I think lawyers do think about what the legality aspect of the change or the fair equitative distribution would be. We look at more around what the cash flow of that aspect will look. So that after the fact, what would be your world? Is it in your best interest after, you kept that property for a long time? So we look at more, I guess the difference, what we look at it is we put your whole financial flow during, before, and after separation. So we model that into the future. So we have powerful tools at our disposal to just show you just what the future may look like using an array of assumptions, such as, is rent going to continue to go up? Are the rates going to be the same? Is, the interest rate, we can manipulate that in our model. So those are things that a lawyer would unfortunately don't even have access to our software. So that's probably the main difference with it. Not lacking, but it's just not their scope. I think that's
and I've seen you have like some cool graphs where you're like, if you buy the house, when you're 80, you'll have no money left. Or if you rent, you'll have money until you're not, like the different sliding options. So a financial planner can kind of nut out, okay, well, what part of that percentage is going to be in the house or in shares or in money, and what's it going to look like when you're 80? And I think that's so important. And if you can see it on a graph, if you're not a numbers person, then that's really good. And then that's where the financial planner can say to the lawyer, hey, you should probably be asking for this for them because this is what they actually need in the future. So that is really good. So let's get into step one.
Yes.
And that's just getting your head around the property pool, because let's be honest, a lot of people, they don't know 100% what their assets, what everything is, and what their liabilities are. And the property pool is like a hard thing to nut down. How do you try and help people nut out their property pool?
And I guess luck is a lot here, but we've been helping quite a lot of divorcees in their process, thanks to you guys and our involvement, just to helping you guys. But we roughly became a small expert in this field. So the first thing we tell them is we split the help into two ways. The first is to put everything on a piece of paper. Well, usually it's just an Excel spreadsheet of everything you owe, and how do you pay things from and to. So that is a visualization of your entire financial home. Like you correctly mentioned, sometimes in people's world, that's the last thing they know about. So if you add that to the stress of separation, it could be really overwhelming. And that's the first aspect we help. So we say, bring every piece of paper that contains any sort of financial information into our world, and we will do that for you. So when you go and talk to lawyers, you're empowered with the value that your whole financial home looks like in a net value, or even an overall sense of where things get paid in from to.
So,
yeah, that's the first thing we look at. We are genuinely detectives at that point. What we look at, just send us your financials, send everything you can think of, and we'll piece it together for you. So that's a pre-settlement help. Trying just to piece that together when lawyers come back and say, because that's when there's some of those, you'll hear in other podcasts when I'd say that's kind of like out of my pay grade, that goes to the lawyers. And the lawyers would say the same, that's actually out of my pay. That's Pedro's job. And some of those things, that's where we work collaboratively with lawyers. The first thing would be, for example, the percentage split. We cannot tell you that. A lawyer will identify that, and then we play a part after that amount. Because that's usually the first question is how much I'm going to receive. And unfortunately, I can say, you have to go to the lawyer and they'll explain there's so many variables that we wouldn't have a clue. That's out of our scope. Once we get that percentage, we get to strategize around, well, if it's 50% and you keep the house, you need to pay your ex this amount. Is that doable? No. Yes. So those are the first, I guess, things that we would look at.
And that's awesome because I think if you can have a map of here's all my companies, or because a lot of people sometimes have trusts and different structures that they've created to dodge tax or whatever it is they've done. Hopefully not to dodge tax.
Yes.
But, big complex structures, and then you're trying to get a settlement and also dealing with your ex and dealing with all the drama that's involved with that. The last thing you want to do is sit down at a computer and look at your budget and figure out whether you're a director or a secretary of some random company. Can you help people figure out if they're somehow involved in companies? Like, can you figure that kind of stuff out?
In a sense, to an extent, we don't get access to, obviously, private records. We can find records on ASIC. So we can, inquiry and basically, if you have some knowledge, usually the best deal would be to get us in touch with accountants. Accountants are the ones that just get all that information set up, have direct access to ATO records. So that's usually our first protocol. If the accountant, because this happens all the time, the accountant is my ex-best friend. Yeah. Okay. Well, we can't tip that off. They don't know I'm about to, pull the pin on our relationship. So that's when things, again, go back to detective worlds. We can try. The best solution is to be prepared. So we go through your emails, try and sort all that information, and we can clarify that for you. That's if that's the case. But if the accountant is a non-biased individual, then we go, put us in touch with that person and we'll ask all the questions and we'll piece all that together. That's usually, I guess, how we can help sort some sort of directorship or if your name is in some sort of form of entity.
Okay. All right. So you help them sort out their property pool and you've gone, here you go, take that to the lawyer and go and figure out your stuff. Once someone knows, step 2, the lawyer's said, okay, you're entitled to about this much of a percentage. Just for the point of this podcast, let's just say they've said 50%, which it rarely ever is.
Yes.
So once they know what percentage they're going to get, you said then you start looking at things. So what
Correct.
do you do in that stage?
So it depends on how clear the client is. We can now formally provide advice, or we can continue with the general aspect that if this assumption is to the best of your abilities correct, we can then try and figure out, can you afford to keep these assets, whether it is super in the property, cash, cars, the lot. So we now start to think about what suits you and your future in your cash flow, in your goals, like everything. Usually it's really hard because someone's just so overwhelmed with knowledge and the whole aspect is just very overwhelming. So we try to simplify it as much as we can. Look, most of the time is I would just want to keep the property, or I just want to get rid of it, or I just want to move. Okay, great. That simplifies our approach. And you go, yes. And if you would sell this property, so we talk in facts. So this is why the general aspect comes in place. We're not recommending to sell, dispose, keep, or any of the kind. We're just factually mentioning if you sell this property, this is the cost of disposal. So meaning this is how an agent will charge you plus marketing fees. And if you buy a new home, this is, stamp duty. So the cost of buy and replace is this much. Would you continue to do that? Yes, I'm happy to keep it. It will buy me time. So that's an informed decision based on factual information we're providing to the clients. So we're always trying to make sure that if there's no, because the issue we have with properties, we don't know the actual value until it's straight. So until it's sold, everything is paid, everyone, every lawyers, and then you get your share. That's when we will formally provide advice because we go, that I know exactly how much sits in your bank account. We have a thought of the strategy, but now it's in writing. Now we go, okay, you go and get yourself, usually we do it before we go and see how much you can borrow. Like go and involve other subject matter experts, accountants, brokers, buyer's agents, you name it, who we need access to make sure that the strategy that we're considering makes sense. And now formally we go, funds are in your bank account. Now, X is complete, removed, children are living in with your world, you're renting or whatever it is. That's how we then put, all the pieces together. So that's when we'll go, buy, sell, put money in super, whatever it is. That's when we formally kind of guide your
Now,
life.
I'm going to put you on the spot here, Pedro. So when you're looking at that, figuring out what percentage of what do you keep. So what are the pros and cons? I think you just pretty much touched on property, the pros and cons of keeping property. So like if you sell it, there's all those costs that you just mentioned. What about if you just take all the cash? Are there any pros or cons of just taking all the cash and nothing else?
The classic sentence, cash is king. Cash is king because you know for a fact the value at the beginning of the negotiation and at the end. The cons is opportunity cost of it. So if the cash sits in a bank account earning 4%, it could, if it's a lengthy exercise, it could be, you can miss out on potential returns. But that's the risk and return aspect of it. It could be the opposite. It could be, it's a downturn and property is falling. Australia hasn't seen it, but it is a fact. It can happen. And that's another one. Cash remains the same no matter what's happening. So with cash, it's easy to plan. It's easy to tell you have cash. This is how much you can set aside. This is how much you can invest. This is how much you can borrow. It's a really easy moldable plan with cash, and the variables are just so much simpler. Whereas with property, it could be, I don't know, when you're selling it, someone looks and there's a structural problem that you didn't see because you never looked at it. And now, well, this property has to be sold with a discount. That's when there's so many variables that we have never known until you sell. So property, I guess that's the issue there is like if there's this discount to be given, retaining wall needs to be removed and that's another $100,000. So I can't sell it at $1 million. I have to sell it at 900. So not that it happens often. It's just things that we
What about
consider.
super? What are the pros and cons of just going, nah, I don't care about super. I'm just going to walk away. I'm not going to try and get any super. Like, what are your pros and cons on getting super and not getting super?
So I think I'll give you pros and cons of each asset that is pretty major. So let's start with your property. The pros and cons, we have to split properties. If it's in property will have to be split in 3. The main is if it's your home, if you live there, the main pro there is that all the growth of it's tax-free to you. It just basically, if you bought it for any property I've seen in the past year that it was bought for less than 500,000 over 5 years ago has doubled in price. So all that growth is for you to keep. So there's nothing like that in the current state. Well, there's something similar, but I don't want to complicate the conversation, but that is a plus. You're getting all that growth for free. The con of a property is, well, you have to pay that half of that growth to your ex. That has to come from somewhere. There's not enough cash, you have to borrow. So then that complicates things because now your cost of living is not just paying the bills, it's now adding debt to your system with one income. So that really complicates things. There's more risk involved. So we have to consider you if something happens to you, if you get sick, injured, or not with us. Those are things that have to be, attended. If you were to put debt in your system because that's what you want, we have to protect you. So that's pros and cons in a very simplistic way of the property if you lived in it. So principal place of residence. A property is an entity. There's pros and cons to it. The pros is that it's very flexible. So even if there's growth, if there's CGT, so there's tax involved, it's not really, you can manipulate that over the time because it's in an entity. You can distribute to children if there's children. You can distribute to parents if they're not working. There's a whole array of things you can do. So that's a pro. The con is that it's a complex environment. Like that doesn't mean law changes all the time. So that's not forever. What happens today, like the law we're dealing with today might not be next year, let alone in 10 years. So that complexity may mean nothing for you in the future. Now, the third property, which could be in a self-managed super fund, I'm not even going to complicate things further. I guess the pros there is that there's potential for tax-free earnings if you retire, depending on your age. And the cons is, again, complex. It's very, very complex. You need to understand what's going on. Now, not to go too deep into that's property on its own. Cash, we went through. And now super. Super, it will all depend on your age. It all goes down to your age because it's when you can access super. That's when we see if the client comes in and the partner has a higher balance super and they have nothing, we go, how old are you? If you're really young, would you have the chance to replant this super with the capital that you'll be giving outside? We will model that. Yes, you can. Over 20 years, we can then put back that money that you otherwise don't have. Very good. It works. If you're 59 and you're about to, enter 60 and you have $10,000 in your super, we go, well, actually, super is the better environment because once you hit 60, all that money in super can become tax-free. This is the way around it. So that's how we kind of lay it down is your age. Based on your age, super looks attractive.
Right. Okay. And remembering, Pedro is not your financial advisor and every situation is different, but these are just some general pros and cons. What about shares?
Shares, I guess it all comes down to the growth of, they can either come at a tax liability. Like imagine you get $1 million in shares, but there's 900,000 worth of growth, meaning you bought those shares at 100,000. Now they're worth $1 million. You get them, but to dispose of them becomes expensive. Like if you need money to live off those shares, you have to pay taxes on it. If it, you need the whole thing. So those are the thing we take with consideration. It could be the opposite. There could be losses. So that's great. We can use those losses for earnings in the future. So shares is great because it's disposable. And I'd even put this for the listeners. One thing we look at is liquidity. If you can't sell a door of your home, you can't sell a bit of your home. You have to sell the whole thing to live off it. Whereas the shares, you can sell a little bit and, contain the liability until you retire or X, Y, Z. So shares is good. It's just be mindful of whether there's a big growth or not.
Right. So in that step 2, you would go through all those kind of things and the lawyer would say, all right, how do you want this 50%? How do you want it in the consent orders or in your court orders? How is it going to be given to? Is it going to be half the shares? It's going to be the house is sold and then it's divided up. So all these kind of complex pieces of the puzzle are being moved around. And I think that's where it's really important to have someone who's not a lawyer, but has a financial brain, whether it's your accountant, whether it's a financial planner, just someone to sit down with you and make sure you've thought about all of the things. Because as Pedro's just listed some of them, I didn't even know that when you sold shares, you had to pay tax. I was completely oblivious to this information. So, I'm super clueless. I'm guessing the listener, if you're listening to this, you guys are super educated, but there may be things you don't know. You don't know what you don't know. So please make sure you speak to someone in that step. So then, okay, Pedro, then step 3, they're about to get the deal done. So this is when you need to plan for their future. And we did talk about this a little bit at the beginning. Let's start with, what are some of the common mistakes people make when thinking about their future after their divorce?
Good question, because I needed to make a point that you touched there. The first, this is not a mistake, it's just a misconception. Accountants cannot provide financial advice to an extent that we can. Unfortunately, it's a kind of like a difficult array of where can we navigate in each other's worlds. An accountant cannot tell you to buy or dispose shares. It's a no-go. It's only a financial advisor. Now, obviously, the financial advisor word is protected. That meaning is protected. Only someone who's studied, had all the background required, and has passed exams, and et cetera, can be named a financial advisor. So an accountant can help you mostly from a tax point of view and your company. So if you have a company, if you have any requirements from a tax registered agent, with a financial planner, we can model your future. So I think the misconception is key there that, because it happens, your lawyer, your accountant is your trusted individual. Should I buy shares? And they could have an opinion. Now, those shares are great. Technically, legally, they cannot provide, with that information. Because if you make an this is probably the key word in the legal world. If you're influenced by that person's opinion, that's financial advice. And if that execution puts you in a bad spot, you cannot have recourse. You cannot go back to the account and say, you told me to sell these shares. I just lost 300 grand because it went up. There's no goes on. You don't have recourse. Was with an advisor. You can't. So we can basically say, hey, I'll put it in writing. This is why I want you to dispose of the shares out of them, to diversify yourself, to make sure that you have cash in your world. And that's why we have reasons in our world. So that kind of is the first misconception of the kind of answer the question a little bit.
Yeah. And then so how do you help in this step 3 of planning their future? How do you help them figure out what they actually need? Like, how do people figure that out? Need to start doing your disclosure but have no idea where to start? Feeling overwhelmed about mediation coming up? Or just trying to deal with negotiating with a manipulative ex? Then you need to go to thedivorcecourse.com.au. She'll go to the free resources section where you can get a mediation checklist, a disclosure checklist, a word salad, read a letter like a pro checklist, and also a before you go checklist. Get ahead of the game and be organized and ready, as this handy checklist, along with the accompanying episodes of the podcast, will be perfect for you. All you need to do is go to thedivorcecourse.com.au and go to the free resource section and download the free checklists today. So how do you help in this step 3 of planning their future? How do you help them figure out what they actually need? Like, how do people figure that out?
Yes. So I think, and this will become more and more important as AI continues to absorb some of we become generally a psychologist of your world, because there's actually a reasoning around the psychology of money. And we become your person. So we need to flesh out your goals, because either A, you've been through a traumatic world. B, you need to kind of reset your goals, because goals are usually very age driven. When you're young, I want kids, I want a house, I want a car, I want to travel. When now that's ticked and now your world looks different because now you're single again. What are those goals? And they keep evolving. So we flesh that out. Like, do you want to retire early? Do you want to continue to travel? Do you want a new partner? So those things that are financially driven, we just have to take that into consideration for your planning. So future self can have enough to meet those goals, and you can pay yourself when you're, in retirement.
And I think going through divorce, that is the last thing you're thinking about. I think you ask
Correct.
anyone, they say, I just want to get my property settlement. I don't care. I just give me some check and I'm walking out of here and I never want to see this person again. But it's so important for everyone listening today to know you need someone to sit down and go, yes, that's true, but let's make sure that future you doesn't come back and get a time machine and kick your butt because you didn't think about these things. So yes, you might not think you want to have a new partner in the future, but when do you want to retire? And I guess your whole world has always been projected towards one idea. You've always thought, I'm marrying this person forever. No one marries someone temporarily and knows they're going to break up. They know it's a forever thing. And then if it's not a forever thing anymore, you do have to completely readjust your thinking. That is a psychological thing, I guess. And then the
Correct.
fear around money that can happen, particularly if someone's been through coercive control. And if you are triggered, please call 13 11 14 Lifeline. But some people haven't ever been allowed to touch their money. Some people have never been allowed to choose a car. Someone's never allowed to make a decision financially in any sense, let alone, have money of their own. So it can really put people in a big new world that they've never been in, Pedro. So that I think what you do and financial planners can do for these people is so important. Do you think people should be starting to think about this before they go into mediation, or is this something they should think about right at the end before they sign their agreement?
I've actually, one of your lovely listeners gave me some feedback once. There is an issue with availability for planners at the law. There's a big shortage of us, and it'll continue to happen because it's used to be 30,000 of us. Now there's 15,000. I projected that it'll be around 10,000 in the next 5 years. So max. Yeah, because there's no one coming in, no new fresh people coming in to help. So that's an issue. And I point that out because when your lovely listener came in, we helped her from day one. We just didn't care whether she had the money or not. We just went, hey, I want to help you make sure that you save money with lawyers so they don't just do this. Yeah, because it's so simple for us. We do it so many times. We just say, help you build your financial home in an Excel spreadsheet that you may ever know about. That helps you, negotiate with power, knowledge, So that for us is key. I will always tell someone, go and see an advisor from day one. The issue was her comment. She mentioned very, very clear that she was happy that we were able to help her because we don't care. Like we just went, pay for the discovery and that's it. When you do settlement, come back and we'll help you. She said 2 other planners did not help her. Said because she didn't have the funds. They said, come back when you have the funds. And for me, I kind of, it's sad because I wish every advisor available is able to help anybody. But I also understand from a demand and offer point of view, there's just so much demand for our services that I get that some planners will have just a line on the sand and say, look, we cannot help you because it's not, I guess, financially viable for us to help you at this stage. So to answer your question, yes, go and try and find an advisor who can help you. Obviously, we can try. I've just added another advisor. Used to just me, now there's 4 of us to try and cope with demand. But I know that could be other advisors out there. We get from just talking to you from everywhere across Australia, even overseas. We've been contacted from overseas, like, hey, can you help us with the US? Like, no, we cannot. So, so I think, yes, definitely help should be from the minute you're considering separating and all the way to the end. Like when you choose an advisor, is a forever relationship. This is like you're choosing your GP. It's a forever, working relationship. But I'm conscious of the fact that there may not be the enough availability for you to get help from the beginning. So that's
and I think some people who are in coercive controlling relationships or financial abuse, they on paper they look like they've got tons of money, but they have that same issue with lawyers as well. They can't afford to pay a lawyer, they can't afford to pay a financial planner, or they're just the drama of it all. People don't want to be involved. So it is good that, Pedro, you do help people. I think that's awesome.
Maybe in the future there could be something that we can just give out, just like you girls. Maybe an add-on to your course, because it is the demand is just insane. I could not foresee this. I knew you were onto something a long time ago, but this is beyond my comprehension. It is.
We do hear of people who already have a financial planner in the marriage that has been managing their financials. Is it okay if a listener today has a financial planner who's also their ex-husband's financial planner? Is it a good idea to get help from them?
Good question. I just got my first couple getting divorced. So I'm the one in the middle. So I specifically mentioned this. If the divorce is amicable, that both parties are in agreement, they're still communicating, and there's no, I guess, tension, the advisor can somehow still be able to help in that regard. If it's not, you must get someone else, because the advisor cannot have both interests at the same time. Yeah. It's impossible. You must have someone's interest alone and they only. So if they both parties agree, this is amicable, we know, there's children involved, we're happy, we just, our relationship is parted ways naturally, great. Your current advisor, it's could be the person, but it could happen, and that has happened a fair bit, that the female has never seen the advisor because they're just never involved. You may not be comfortable with that person. You can choose to have a brand new individual. I guess that's when things could get a bit tricky, and it has happened to us as well, is you don't want to trigger the other party because of what you're thinking. Like, you're like, I'm about to, this is, it's down below. So we just don't know. And we just tell the person, hey, can you access documents without triggering, suspicions? Because out of somewhere you go, hey, I want all my valuations of all this stuff.
Yeah.
Well, I think you do that. So
red flags.
And it could be it could be tricky, but if you starting fresh, it's not impossible. It's just sometimes.
Right. Okay, I'm going to say don't. I'm going to say get your own, but everyone's different. But most of the people listen to us don't have amicable. So you figured out what you want. So I want everyone to promise me today you are going to actually stop thinking about court dates, stop thinking about mediation, stop thinking about what ridiculous things they've written in an affidavit. And I want you to sit down and think about future you, and yes, there will be a future you in 5 or 10 years, hopefully much sooner than that, 2 years. Where do you want to be? How do you want to be living? How much money do you need to spend? How much is stuff going to cost? Like, are you looking after the kids the whole time? What's that going to look like? And really have a think about, do you want to rent? Do you want to live in the same house? Do you want to move? Like, these things need to be thought about. And I know you don't have the headspace for it, but I promise you'll be doing yourself a big favor if you do that. See a psychologist, see a financial planner, figure that out, because then the next step, Pedro, is actually making it happen. So once it's locked in,
Yes.
It's locked in, guys. It's a big step.
I cannot stress and push toward what you just said. The big difference that we have as advisors in trying to help someone is the biggest goal you have in your life, and this will happen to everyone. We need to know how much you need to live. Like, how much money? That is a question that happens all the time. And it's the one that gets usually, I don't know. Do a budget. It's so simple. You can get ChatGPT to do your budget for you. We can tell you a million ways to now is not even the time. You can just remove all your identifiables from statements and put it in chat and say, hey, or any AI, and say, what do I need to live on? Split me everything. That number is incredibly powerful, because exactly what you said, Laura, was, do I need to rent? Well, you can manipulate your budget. Is it in my budget? So that answer is important for an advisor to know, because that's your main goal. Does not matter what age, what lifestyle you have. It's just that goal. So it is imperative to do.
When you walk into a mediation, if you know those numbers, if you know exactly what you can live with and what you can't live with, you're not making decisions in your mediation based on what you think is fair or what you think you deserve or you're entitled to or what emotionally you want. This is actually a facts-driven mediation, and you're going to be better off because of it in the long run. And that's a lot for you guys to do, because I totally know how stressful it is. And the last thing you're thinking about is budgets and financial stuff when you're stressing out about just getting any money at all. So I understand. But let's say our listeners have done those 3 steps and now they've got their settlement, Pedro, they've got their court order or their consent order.
Yes.
Says what's going to happen, who's getting the house, how's the super being split, what's all this. So then that step is making things happen. So is this a phase that you help people in as well?
Yeah, correct. So this is where all advisors come in. That's when, that comments where most advisors don't intervene until this stage. This is when we do indeed intervene. We can intervene beforehand. I think the major risk you're taking, and I think that was one of your questions you may have, but one of the risks you're taking is you're now the full soul, I guess, responsible human if you have little humans or just on your own. What happens if right after you get all that money, you get in the car and you're unconscious? We need to understand the risk level you're taking, the amount of responsibilities you're having financially. So if you still have a loan, if you sign a new loan and said, I'm going to come with, I don't know, this amount of money for 30 years of paying this, those are the things we need to understand. So yes, we do start probably doing things. Is your super adequate for you? Is it invested according to your age? Are your beneficiaries according? Because now that your ex is removed, that's no longer about a nomination. Even if it's name, it's there. You can't put your mom, you can't put just depends. There's a whole bunch of things we will look at that really, really can change your life and the life of your children if, you're not with us. So yes, we start implementing and looking at your future. How much do you need to live on? Do you have spare cash? What's your job looking like? What happens if income is not there? Do you have an estate plan? That's another one, because the biggest thing we see, and this is for, I guess, most people don't think about if they're gone immediately after separation. If you're gone, the default human is the ex as the guardian for your children, if there's children involved. Therefore, if they're under the age of 18, who then manages those funds for them? Because the guardian makes all the decisions for them until they're of age. Imagine you went through that whole work and the whole stress and the whole trauma to just basically revert back to day one.
Yes. Yeah.
So those are the things we ask. We make sure you have everything in place. That's what we keep. We can obviously try and do it before, but we have to work really closely with the estate planning lawyer, that there's entities involved, that there's documents in place, so that whole experience, nothing.
So you're talking about that, getting hit by a car. So that's the insurance side of things. So that's where you guys are really like, because I did have a lady write in and say, I think people do forget about insurance after divorce because it's just, it's an afterthought. So what kind of things should people be thinking about insurance?
So, and I've had quite a bit of experience. So first one, for example, I had a client who had a traumatic divorce a long time ago, 10 years ago. And through that divorce, she went and saw the services that were being provided by her employer because it was traumatic. It was basically, she just needed help to talk to someone. That was it. She used, I think it was 3 times, to talk to someone. It was internal. That was it. When we saw her later, we said, hey, you have a gap here because if you were to be disabled, you need some insurance to make sure that A, you pay your bills, B, you pay your debts, and C, you can, be sought out for it. When we established those insurances, the insurer came back and said, hey, we need to put an exclusion in her world because she saw someone. And I had to fight that one pretty hard because I was like, look, that was a once off. And that happened because of basically a stressful environment that will not be repeated ever again. Because it's that individual per se was in the same area and it was just really difficult. We were able to help with that. Now, imagine I would have seen her while she was being divorced. I would have done that exact same analysis and say, you need this amount of insurance and, this and bit before her seeing the help. That would have been an issue. Right now, most likely, I won't be able to probably fight that one. Back when I did it, insurers were able to accept that level of risk. And with my help, we were able to get through the insurance application. Today, that might be difficult. So those are the small things that could change your life because imagine indeed you do need insurance. And most likely, some people don't. Like, it just depends on everyone's situation. If you have debt, if you don't have savings, so those are the things we take into consideration from an insurer's point of view. Like if we can come in and help really quickly and right before you need help, there may not be exclusions. So after you have your insurance, we say, okay, go ahead and, go for gold, get all the help you need because you now have full protection or you may already have it. That's another thing. Maybe you have it. We just don't know.
So you're really just like a nagging mum. So when the kids go to school and you're like, have you got your umbrella? Have you got your lunch? Have you got your hat? What happens if this happens today? What are you going to do if you miss the bus? So you basically just go through all of the things that could happen to us when we, live our lives after divorce.
Bingo.
And the things as a kid, you don't think about umbrellas. You don't think about your lunch, or maybe you do. But, so you're just that kind of person that comes in and says, hey guys, don't forget, sort this out.
The lunch.
Yeah. Okay. There you go.
Yeah. Because what happened, if I can put it in the same analogies, because I've seen other kids go to school without lunch and how bad that could be. Or I've seen kids, get wet in the rain and how bad that could be. And how, it's just because out of experience, I've seen what happens. So
basically, you'd be really annoyed if someone went through all this and they didn't have a will.
Yes.
They didn't have a will.
I would be so upset if you don't have a will because of how difficult it is to then distribute your wealth and all these insurances you have or all your properties because you didn't put it in writing. It's already difficult enough when you're not here. Imagine, trying to piece it together. It's already difficult enough when you're here. Imagine.
So another thing that happens when you get your orders or your consent orders, it might say such and such must sell these shares and do this and change, get the thing out of super. Is that the kind of thing you guys help with? Do you help with selling shares and fixing supers or setting up new ones?
Correct. We help basically understand, for example, if it's a self-managed super fund, we go, look, this is why you should keep it, or this is why you should put a brand new one. These are the pros and cons of it. And we give reasoning to the recommendation. So we help set up new insurers, new supers, sell or buy or keep shares and maintain. Because obviously if the recommendation is to dispose of shares in a timely manner. So for example, we imagine today I meet one of your listeners and we say, you have $1 million worth of shares. Let's dispose them because you need to live off that How do you do it? Well, we go a little bit now, so we don't trigger too much, a little bit later. So you try and dilute some of the liability. So yes, we do help in the disposal of shares, purchase of shares, establishment of accounts, establishment of super, disposal in, consolidation.
So you're just like the money genie.
We call ourselves, I think, and this is one planner out there, which I love. She's very lovely. We're the doctor of your money.
Perfect.
Basically.
Yes. Yeah.
Yes.
And look,
yes.
I think I've heard about different money, so like the psychology, people have different money type of relationships with money, and there's all sorts of things that
Correct.
you just don't know. So let's just go through it again. So Pedro, really people need to figure out and understand their property pool, have all of that down in one, knowing where it's coming in, where it's going out, and what everything is so that the lawyer can help you come up with a percentage. Then
Bingo.
It's really good to sit down and figure out what works for you. Just 50% of something isn't explanation. Is it 50% of what are you going to make it up of? Is it a bit of the shares, a bit of the cash, a bit of the super? Is it only cash? Like that kind of stuff is a really good thing to talk to someone who's a financial expert or financial planner, because they're going to know things you're not going to know. And then thinking about, what do you want for your future? So what's going to work best for you? And actually thinking about that, guys, because a lawyer's not going to sit down and ask you that question. They just want an agreement. They just want to get a consent order or an order. That the lawyers aren't saying, what do you think you're going to do in 6 years? Or are you going to still work? That's not their problem. So you really need to do that third step. And then step 4 is then once you get it done, signed and agreed, getting it all done and setting yourself up and making sure that moving forwards, like Pedro said, you're the adult in the money world now. And whilst you might not want to be, or you've got so much going on, it's a lot to do, it's your responsibility and it's all on you. So if you need help, then financial planners do exist for that. So that is good. Or just educating yourself as well. Pedro, I'm going to ask you, what's one financial decision people regret after divorce? Do you ever see anyone do anything silly after divorce?
Yes. Many times. Many times. I forgot to tell you that the last bit of our work is managing sentiment. Most of this, yes, and most of our work as well it's managing your sentiment. For example, we've had people, I love this property. This property is for me and all it. And then once they have it, they realize they can't maintain it or it brings memories and it's sentiment. You really know about the sentiment itself. So we manage that because we just don't care. Like we are more objective of the fact that the property should be there for a reason. Is it for your future? Is it for your housing? Is it for, there's a million things we think about that property. Whereas most people think about its sentiment. I love this or I hate this. It could be the opposite. I hate this property. It reminds me of him or her. And we manage that. This is for this particular reason. So I think making decisions with sentiment is usually a recipe for disaster. That's what having an independent thought can help, because we are completely removed from your feelings. Yes, we empathize with you and generally we care a lot, but we go down to the numbers. We go down, is this in your best interest? Will you be able to afford this? Is this doable? Are you going to have a bright future? There's a million things to skin the cat and obviously tick all the boxes that the lawyers are asking off. You need to have 50, no more than 50. Great. We can't have it because of property won't make it. But I think that probably the biggest mistake I can see is only thinking with your sentiment, with your feelings.
And we do have that really good episode with you. If anyone wants to go listen to it, I'll put it in the show notes, where Pedro takes us through basically just, do you keep the house? Do you not keep the house? What things you need to consider? And he does talk a lot about sentiment in there. And whilst he sounds like he doesn't give two hoots, he is a very caring person. So don't
I care too much sometimes.
I think you do probably care too much sometimes. But so, Pedro, I can't thank you enough for coming on today. How can people get in touch with you if they want to work with you or learn more?
Yeah, so there are two ways. If you need help immediately, go to our website, marinwealth.com.au. There's a book now linked there, and basically you can find, in our calendars where the easiest or wherever we can see you. Secondly, if you're still unsure, there's an actually contact us query in our website. So just contact us, send basically a little description of what you require help with. And one of our advisors will reach out to you within 24 hours to make sure you're the right person or you need help generally. So those are the two best. You can also find us on Instagram, Marin Wealth. It's our tag. And also you can reach out to us there. Our response rate is usually within 24 hours.
Well done. And Pedro, you're also coming on our member Q&A soon. So you'll be there Wednesday talking to our members, answering questions. So that's going to be really awesome. I look forward to it. So if anyone's listening today and they're a member, you've got that to look forward to.
Yes, I can't wait. They're usually really, really good. Everyone has really relatable questions.
So thank you, Pedro, so much for coming today. Mum sends her love, and we will hopefully see you in the future.
Amazing. All I can say, I'm so proud of you all. This is such a great deal. You're helping community in such a great way that when you mentioned I'm doing this, I'm like, yes, this is amazing. It's such a win-win because it's so relatable. And everyone who's listening to this, Laura is such an amazing person. She put this from zero. So I'm incredibly proud of you.
Thank you, Pedro.
Laura.
You did push me along a bit. You were like, go do. All right. So thanks, everyone. We'll see you all next week. Thanks, Pedro. If you found this podcast helpful, we'd love it if you could rate, review, and subscribe. By doing so, you are spreading the word to help someone else just like you. Lynn would like to remind you that this podcast is general advice only, and you should always get legal advice in relation to your particular situation. And remember that the Australian laws may have changed since recording